Hey traders, checking into the stock market today. Big proving it day out there for the bulls. They kept complete control with the gap up open and then follow through. We then saw the day get very slow and boring before a little bit of volatility into the end of the day. Let's see how it played out. Is fear gone? Sure seems like it. So the main takeaway from yesterday's video was bulls played defense after a 10-minute flush, held support, and then saw a bounce get some follow through. We ended the day yesterday saying bulls need a green day today because if not, there's potential daily bear flags. Well, today was as strong a day as bulls could have possibly hoped for. We had gap up opens, and not only that, we held those gap up opens and closed strong. So we saw a gap up, notable follow through for the first hour and a half, and then nothing, just sideways for 4+ hours where nothing was going on. And if you were trading actively in that range, aside from, some individual names that had volatility, that's where you get chopped up. And then there was some profit taking into the end of the day to look for hourly higher lows to form. And here after hours, we just V-shaped with 5-minute oversold conditions, setting an hourly higher low and leading to a higher high. So the hourly uptrend is our guide. We have the S&P 500 futures chart, 4-hour stair step pattern, higher low every single candle, 8 in a row. So we're watching that pattern in the short term. At this point, I want to see a gap up open tomorrow. I approached today with the mindset of I'm scouting daily lower highs, and those daily lower highs have not formed. I'll go over a bit more how I approached the day and some trades I took and some frustrations at the end of this video, but I want to see another gap up open, and I want things to get overextended to the upside to be looking for a bearish day trade. But we'll see what we get. All we know is the bulls are back in the driver's seat. With where we stand right now, looking at SPY, SPY is at 469. The all-time high is 1% away. So right now, after hours, a little bit higher than where we closed. All-time high is 1% away, and the fear low is 4% away. How fast did that change? Again, market makers and the market in general and the way these cycles work, you go from FOMO to fear and from fear to FOMO as fast as possible. That's how the people that play this game for a living with big money, that's how they make their most money. Because if essentially what they're trying to do is just extract emotions from newer traders and market participants. And this is how they do it. Fear where, coronavirus and, what's going to be happening. And next thing you know, all-time highs and Santa rally are back in the conversation. So we knew, bigger picture, this is where trends help us. We knew to be scouting weekly higher lows. There were tons of space for it on both SPY and QQQ. So it's not like a drastic surprise. Oh my God, we're keeping the weekly uptrend. That was always the most likely scenario. It's just astounding how fast, just one day, everything changes. So hourly uptrend is our guide. And we know SPY can V-shape. If I'm scouting a name to look for a daily lower high, it's not SPY. I've learned that lesson over the last 4 years, where normally where I would anticipate a stock to form a lower high, SPY is not a normal stock. It V-shapes to higher highs all the time. So I can scout other names for daily lower highs, and we can look at Amazon, still a lot of space for that daily lower high. We've got Facebook with a lot of space. We got our crypto stocks, they've bounced very significantly, 30% bounces, but tons of space for that daily lower high to form. So we are going to be anticipating tightening daily ranges on a lot of individual names, which means bulls had their opportunity, bulls either entering into the face of weakness, getting rewarded for it, or bulls responding to the support holds and the bounce yesterday. But that's the bull opportunity for aggressive bulls. That's past now. Now the opportunities for aggressive bears scouting daily lower highs, and patient bulls are going to be waiting for daily higher lows. They're going to say, okay, these were solid bounces. Let's just go back to a Facebook example. Okay, solid bounce. Once we top out, I'm going to scout a daily higher low and look for a daily trend change to set up, because a ton of individual names still have to prove daily trend changes to the bulls. So broader market looks a lot stronger than a lot of individual names, and a lot of that has to do with Apple leading the charge to all-time highs. If Apple were to give us a red day tomorrow, I'd be scouting this. Well, in after hours, we're higher right now, but before we were rejecting from this resistance, but just something similar to AMD. AMD gave us a 4-hour rising wedge at all-time highs. So if we were to see a red day tomorrow, I would then be scouting the potential of an Apple 4-hour rising wedge. But again, the fact that Apple is back at all-time highs and the bulls are in complete control, it's definitely a big boost for the market, but it's also the factor where these large cap names, these large tech names make up a significant portion of the market, and you have a ton of individual smaller names that are not nearly as strong. So there are definitely plenty of sectors and individual names to pick from, whether you're looking bearish or bullish. And it's certainly a name like Apple and QQQ and semiconductors. They're all over on the bull side. And there's a lot of names on the bear side, whether it's travel names or names that have tons of space for daily lower highs. So QQQ, significant bounce, but if we do not break 40119, which is 1% away, then it is just a daily lower high. And it would then be up to the bulls to confirm the daily trend change if this is going to be a potential weekly bull flag. And it is a potential weekly bull flag. Again, look at our retracement sizes, and coming off of the recent low, well, it got a 50% retracement. That's a little bit bigger than I thought it would be. So, watching for the possibility of a tightening daily range, especially if we reject from 40119 on the initial attempt. But again, same with QQQ. I'm not looking to short QQQ for a daily lower high. There's plenty of individual tech names that are setting up for that lower high, even Tesla. Tesla's daily lower high, anything under 1173. That is still 12% to the upside. So even if we see green again tomorrow, we know a daily lower high is the most likely scenario on a lot of these individual names. Semiconductors, big, strong move. Weekly bull flag, looking to confirm new all-time highs. So resistance 315.57, 318.82, and next time we consolidate, lots of space for a daily higher low. Definitely the strongest sector that we have right now in the broader market. Looking at the solar sector, because I haven't in a while, another sector looking for a daily lower high to be the result of this bounce. So as we know, Tesla is a possible monthly bull flag, but we need a daily trend change back to the bulls as step number one for that possible daily bull flag or monthly bull flag to try and form. XLV, we know we're looking for a weekly higher low. That's been the most likely scenario for a while because it's a clear equilibrium. Wide tightening range. Is our weekly higher low set? It's shaping up. We're not convinced yet, but it's trying to form. What do we need to see? A daily trend change. So if I'm a swing trading bull, I'm looking for a daily higher low to make an entry. I can scale in to the pullback if I want to be aggressive. I can wait for an hourly downtrend to indicate daily consolidation and then wait for an hourly trend change back to the bulls and then make an entry, but playing off of this low and saying if that's our weekly higher low, I feel we're going to break this equilibrium bull. And I want my entry on the weekly higher low. So a bull will be scouting, a patient bull that's not in on this big bounce already is scouting a daily higher low entry. Netflix, what I'm very curious to see is this daily oversold back burner, first daily oversold coming from all-time highs, is that going to mark our monthly higher low? And I'm going to be observing more because, again, these are clues and signals that I use all the time day trading. First 5-minute oversold, scouting an hourly higher low. SPY just did it into the end of the day. First hourly oversold, scouting a daily higher low. And I have not practiced a lot with those signals, back burners, on longer term time frames. So the question is going to be, does first daily oversold conditions for Netflix result in a daily trend change back to the bulls, shaping up a monthly higher low? So I'm in observation mode to put more tools in my tool belt as a trader, and I'm just building a library of lessons and historical examples. And if Netflix plays out, you better believe it's something that I'm going to be looking towards in the future. XLF, nice big bounce, daily trend change still needed. Lots of space for the higher low to form once we top out. The weekly chart is still in an uptrend, but there is a lot of space for a weekly lower high as well. Again, XLF has been consolidating for 5 weeks, whereas QQQ and SPY have been consolidating for 2 weeks. So there's more space for that lower high to form. SPY 1% from all-time highs, XLF 3 to 4% from all-time highs. But again, for clarity's sake, stick to the daily charts. Tons of names have to prove daily trend changes, and to set daily higher lows, we know red is coming. Whether it's tomorrow or whether it's to end the week, we will look for red to look for daily higher lows to form. IWM, significant bounce. When we lose the hourly uptrend, we scout a daily higher low, and the bulls have to shape up the daily trend change. It's another name that has a lot of space for the weekly lower high. I will be scouting IWM's most likely scenario to be a weekly lower high as a result of this bounce. The question will be, is it a big enough retracement to then be scouting a weekly equilibrium? Or is it a small enough retracement to then be scouting a weekly bear flag? Two very different scenarios. Watch the retracement size. MSOS. So just want to touch base again because we covered it yesterday and saw that massive volume sell-off into the end of the day. And it was some inside info because we get some news today that SAFE is not being included in the NDAA. There's no SAFE in 2021, which was a potential catalyst bulls were looking towards. And we formed a daily inside bar today. So it looks like the Band-Aid was ripped off yesterday. And certainly we're not strong in any sense of the word. But we also didn't see a significant bearish reaction to the news because everybody that was in the know reacted yesterday. But a very clear daily downtrend, and again at multiple month lows, just like semiconductors are our lead bull sector, the cannabis sector is our lead bear sector. Canadian MJ names had a bit of a better bounce day today, but again, this is just an oversold daily bounce, and we're just looking for lower highs. For CGC, anything under 1596 is a daily lower high. We know we're going to form a daily lower high. It's just a question of, can we set up the daily trend change or not? Hourly uptrends are our guides for when daily lower highs are set. When the hourly uptrend is lost, scout that daily lower high. Oil, significant bounce off the lows, 50% plus retracement, but watching for, same thing, a daily lower high. We got the inventory report tomorrow. Even if it's a bullish reaction, going to be scouting a daily lower high, and then the bulls have to confirm the trend change back in their favor, and another name where there's a ton of space for a weekly lower high to be the result of the next bounce. So distinguish that. Not everybody's created equal. You got weekly bull flags like the semiconductors, and then you have names like XLF and oil that have lots of space for a weekly lower high, IWM as well. So it all depends on, are you looking bullish or bearish, and then determine what time frame are you scouting it on. I am scouting bearish entries for day trades, watching for daily consolidation. But I'm not fighting it too hard. So today, that was my game plan. Okay, gap up opens. The only trades that I'm taking today are bearish, looking for daily lower highs. And if I don't get a setup that I like, then I don't trade today. I'm not going to enter bullish positions when the risk to reward is not favorable and it's not my trading style. So I started the morning very patiently. I didn't do anything. I watched the bulls keep full control for the hour. And I did make one, I guess, fairly early on. I was trying to top fish Riot. I had to stop at 30.21 here. We set a 5-minute higher low, lower high, equilibrium. During this tightening range, we were seeing some relative weakness because Bitcoin hit a new high, SPY hit a new high, and Riot did not hit a new high. So I was hopeful I might have made a good entry. But just a little top fish, stopped out, half-day loser on the new high of the day. Okay, 0 for 1. And then at that point, I say, all right, I will make one more bearish entry attempt for risking a half-day loser. And if I lose 2 trades for a day loser, I'm done. A day loser means I'm done. Generally, if I lose 2 trades in a row, it means I'm done for the day. And again, that's just me calling a timeout and not allowing bearish momentum to build. See you tomorrow. I'm not going to lose 4 trades in a day. So, then made another attempt. So Riot got extended to the upside. I was watching Bitcoin extended. I was watching SPY extended and made my second attempt. Let's see where that was exactly so I can give you accurate levels. Looking back in the chat room. In my second and last Riot top fish attempt, 10.51. 2-minute lower high. So this move right here. So entered bearish, and that's just me saying, okay, we're overextended on a lot of time frames. Bitcoin's due for consolidation. This is a big enough 2-minute pullback that I'm going to anticipate a 2-minute lower high as the most likely scenario on this bounce. So entered bearish on that 2-minute lower high, stop goes over the high of the day, and very quickly got comfortable. exit half of my position into that drop. And now I'm not going to risk being done for the day, because if I stop out at that point, break even on that trade, still have a half day loser to go. And I don't consider break even trades a loss. And then from there, okay, let's be patient. Saw the 5 minute, same thing, big enough 5 minute consolidation that we can anticipate a 5 minute lower high as the most likely scenario. I added back half of my short on that 5 minute lower high. And then I exited everything into this drop and then took a lunch break. Could have had a bit more downside, but I would not have wanted to sit through that 2% or so bounce. So that ended up getting back the first loss. Now I'm break even. 1 win and 1 loss on Riot short, break even on the day. All right, it's not my day ideally. I would have wanted some consolidation. At that point, the broader market is not seeing any consolidation. And then I'm just watching SPY trade sideways and nothing is going on. I posted in the chat room, it had me feeling things are quiet, too quiet. Watch for a volume spike, watch for volatility. Didn't happen for another 2 hours, but we know that those sideways ranges eventually break with volume and we see some follow through. So unfortunately, I live stream at the end of the day, 3:15 p.m. And when that's happening, I'm not trading in the last 45 minutes of the day. I'm focused on answering questions and reviewing tickers and stuff. And this is the move that I waited 4 hours for. And I was watching XBI. I did make one more top fishing attempt on XBI, probably right around here, trading the leveraged inverse ETF, LABD. Stopped out, half day loser. So on the day, I ended up with a half day loser, although my long SPY position was up nicely. And again, exited all my shorts yesterday. And it was frustrating because this is the move that I was waiting for. Even half of this move is a day maker for me. So just frustrating that we finally rolled over right into the end of the day. And you'll oftentimes see that where if we're overextended, we know consolidation is due and we don't see anything and it's rolling around into the end of the day, look for profit taking. Think about it psychologically. People are up an extremely significant amount of profit in the last 2 days, specifically XBI. XBI has been in a complete bear controlled downtrend for weeks. And at that point in time, we were up 9% with no hourly consolidation, no real hourly consolidation from that low of yesterday. So that is profit taking and shorts jumping in on things. And I just missed it, and that's okay. So small loss. And same thing. Again, I wouldn't change anything. If you give me the same setup tomorrow, I do the exact same thing. Because probability-wise, it is more unusual than not to gap up in scenarios where lots of names are scouting daily lower highs and see the bulls keep control all day. Generally speaking, you will see hourly consolidation more often than not. Whether it's at the open or whether it's after a bull push on the morning, hourly consolidation happens more often than not. So again, I want to trade with probabilities, and this would be a setup where I would say 4 out of 5 times I'm looking in the right direction. This is 1 out of 5 times where I was not looking in the right direction, and I'm A-okay with that. The fact that I ended up with a half-day loser rather than trying to fight the trend constantly and ending up with a 2-day, 3-day loser, that's a win because I am extremely confident in my ability to make a half-day loser. That's the thing. When you have a goal, a level that you're trying to make on a day loser, day winner, you want to be confident enough that if you have a day loser, I'm just going to make that back tomorrow. And once you prove consistency to yourself, that's when the confidence gets there. But it's also you have to keep it a manageable size. Day loser, no biggie. I'll make that tomorrow. I'll make a 2-day maker tomorrow. So that's the mindset that we want to be in, because the last thing we want to do is say, oh man, 3-day loser, I got to make that back tomorrow. And then that pressure builds and then we have that negative feedback loop. We want to avoid that. We want to keep flow and routine and consistency when we are winning. And as soon as we stop winning, break it up. Break that flow, break that routine, break that consistency, because that flow can go to the downside as well, which would be what I call a negative feedback loop. We want to avoid that. At this point, I would love a gap up open tomorrow. Give me a gap up open, SPY long-term no-touch position benefits, and I'm scouting bear trades exactly the same way that I did today, to look for daily lower highs and eventual daily consolidation. Congrats to the bulls. Again, fear is gone. We've got to break these lows if we're going to see fear return. This is now our fear benchmark. Just like the last monthly consolidation, fear benchmark, haven't thought about those levels since. New fear benchmark, are we going to forget about these levels and run to all-time highs? Entirely possible. But if these levels break, we'll say, hey, wait a minute. Things are a bit different. But bulls are back in the driver's seat. Hope you had a good day. Appreciate you watching. Do good things. So continuing onward, Chapter 3 of our adventure started in Charlotte, went through Smoky Mountain National Park as I was headed west, headed up to Mammoth Cave in Kentucky for this chapter, and also to Land Between the Lakes National Recreation Area between Tennessee and Kentucky, with the goal of continuing westward towards Colorado. So here in Mammoth Cave National Park, that's my tent setup. I've got a very easy to carry light one-person tent, lots of mesh on it, which I like because when I sleep without the fly on, it is great for, feeling exposed and being out in the open, and great for sunrises. There's my hammock. There's my pack. I think it's a 55-gallon or 55-liter pack. And I did have a mat at that point. The army mat that I was sleeping on was from my previous road trip where I learned my lesson, paid for a $100 sleeping mat, and it was well worth it. So I unfortunately didn't have a good experience in Mammoth Cave, not because of this spider. That was a nice little jolt in the morning as I went to pick up my bag. But the reason I didn't have a good time in Mammoth Cave is because it was June and it was the summer and ticks were everywhere. Literally every night I would go back into my tent and have to take off all my clothes. I end up naked in every chapter. I guess that's the way it goes. I had to take off all my clothes in my tent and literally pick over a dozen ticks off of me every single day. And of course, I got most of them, but some of them did latch on. And of course, that's significant exposure to Lyme's disease, which is no good. So avoid these areas in the summer because ticks are rampant. I'm not, exaggerating when I say 10 to 20 ticks pulled off my body every single night before I would go to bed. So these are some nice seashells that I found out on the area as well. This is heading towards Land Between the Lakes, Tennessee and Kentucky. And there's a nice elk lady. And they had this conservation area of 700 acres. And it's pretty much giving you a taste of the animals that are to come out west as you continue towards Colorado and towards Wyoming and all these states. They've got elk and bison and all that just out in the wild. This was a conservatory, so you could go in and drive around and check them out. And of course, the best part about road tripping, or one of the best parts, is the sunrises and sunsets. They are everywhere in terms of being frequent every day. And it's great because they're so different. So you have, all these different landscapes and different cloud covers, and just every single one so much different than the next. And that was, the highlight of the day oftentimes in terms of things to look for. And one thing that I loved to do on these road trips was find a spot into the dusk, because animals are most active early in the morning and in the evening at dusk. And so if you find a spot at, an hour or two before the sun sets and you sit there and you do not move, animals will interact as if you're not there. They obviously know you're there to a certain degree, but, I've been able to sneak up on some animals just to see how close I could get. And I got real close to a baby elk. I'm sure I have a picture of that. But to be able to just be really silent and not move, nature goes on around you, and then you just observe. And I love observing nature. It's one of my favorite things to do. And, people meditate, and that definitely helps calm your mind. I would never sit out and intentionally meditate. The way I would do things is sit down and then just be still and let my mind completely relax, and just, feel into the environment around me. That's my way of meditating, and that's how I calm things down and stay, very even keel emotionally. And that definitely has an impact on my trading as well. So it wasn't, this strict meditation practice. If you're living in a city, or if you have, surroundings where you literally need to lock yourself away to be able to meditate, that's one thing. But when you're out in the middle of nature, it's almost like forced meditation when you're the only person around and you're in the middle of this vast expanse. So that was chapter 3. We're going to continue heading westward into tomorrow, and we'll check back in then. Have a good rest of your day.